بسم الله الرحمن الرحيم والصلاة والسلام على رسول الكريم. Assalamu alaikum and welcome to Takaful online course. And today's session is a continuation of the discussions on the differences between the Islamic insurance and the insurance, or the Takaful and insurance. And we carry on from the point on the profit. So when we look at the profit in the context of the insurance company, it is distributed, of course, if the profit is made. So it is distributed according to the directions of the insurance company, whereby profit in the Takaful, it is shared with the participant. And again, even in the structure of the distribution, we have to understand that the profit in Takaful, it is made through mudaraba, meaning that the participant, as owner of the fund, will appoint the Takaful operator as an agent or as a fund manager to manage the fund and invest it according to Sharia compliance requirements into a different investment asset classes based on the mudaraba, based on agreed profit sharing ratio, whereby the profit generated will be shared in one hand between the participant and the Takaful operator, and on the other hand it will be shared among the participants themselves. So this is the structure of the profit distributions in the Takaful, which is a little bit different than the conventional insurance, because the fund is owned by the company and the fund will be invested by the company. Then they will distribute the profit according to their own distractions. The second point is basically the management expenses. In the conventional insurance, the management expenses are taken from the premium, meaning the premium paid by the participant, by the policyholder. But when it comes to the Takaful operator, the management expenses is paid from the shareholders' funds, meaning that it is taken, it is not taken from the risk fund, but it is taken from the shareholder fund. Of course, the Takaful operator will take wakala in providing the service of managing the funds and also share part of the profit when they invest in the funds based on mudaraba. That's the income of the Takaful operator. And respectively, whatever expenses on the management will be used from the shareholders' funds. Whether that profit generated to the Takaful operator is sufficient or not, it will not touch the risk fund, but it goes back to the shareholders' funds. The other point is the agency commission. Agency commissions, as you know, is a bit different than banking. Banking product and services are offered and marketed by the Islamic banking. But when it comes to Takaful depend a lot on the agents. And sometimes one Takaful operator have 10,000, 20,000 agents on the ground. So it is mainly driven by the force of the agency. And those agents, they are taking commissions when they market and offer this policy to different stakeholders who become later on a policy holder. So they will take a commission. Now this commission in the conventional insurance, they depend also on the agents. Takaful, they depend on the agents. Actually, the nature of the insurance business is depending heavily on the what's so called the agents. So the agency commissions in the insurance business or the insurance company, it is pay or taken or given from the premiums of the contributor. When it comes to the Takaful fund, it is when the Takaful industry or the Takaful operator of the Islamic insurance, those agents commission is paid to them, yes, but it is from the shareholders' funds, meaning they don't again touch the risk fund of the participant, but it is from the shareholders fund. This is what the Takaful operators, they have to manage their expenses. They have to, because the expenses of the company is on their shoulders, the payments to the agents on their shoulders, so they have to manage their expenses in a very prudent manner. The other point is the dissolutions of the company. Of course, in the conventional non-mutual, the reserve and the excessive surplus belongs to the shareholders, meaning the shareholders of the Islamic, the shareholders to the conventional insurance, they will take that money. But when it comes to the Takaful reserves and the access of the surplus, of course, it could be distributed to the existing participants of the Takaful operators, but a view of the majority of scholars that prefer that that fund and that money and that access and that surplus will be distributed basically in a different channel of charity. This is some of the selected key differences between, of course, conventional insurance and Takaful. We stop here and we carry on our discussions in the future. With that, thank you very much. And assalamu alaikum wa rahmatullahi ta'ala wa barakatuh.